They don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hey guys, welcome to the Real Estate Jam podcast. I'm JD with my wonderful co-host.
Hey, Melissa.
We got a pretty good show today, and I think we're going to be able to find a lot of value. We're with Lane Kawaoka, and Lane is the owner of simplepassivecashflow.com. He's been investing for a little over a decade now, controls over 4,800 units, somewhere around 600 million in assets, and raises money and does a lot of good things. Lane, we're super excited to have you on the show. Thank you for dealing with some of our technical difficulties early on. Welcome.
Hey, thanks for having me. Aloha, everybody.
Thank you. Did JD say your name right?
Or did I mess it up?
Close enough. This is the digital age. The only thing that's important is simplepassivecashflow.com.
That's a fact.
Well, I think I got that one right.
Nobody cares what my name is.
Well, we're super excited. I told you a little bit about who our listeners were, but I'm hoping that maybe you can excite them into the reasons why they should be listening to you and what kind of value we're going to be able to provide them with today. Can you give us a little bit of your background, your story, and we'll just see where it goes from there?
Yeah, I mean, today, 7,000 rental properties, about $800 million assets under management, but it didn't always start off like that. I started investing in 2009 while I was working my engineering job, and I kept that job for the longest time because that was my way to get down payments for properties as I continued to buy more and more properties out of state remotely. Built my portfolio up to 11 in 2015, and then went into apartments and syndications. But we can kind of take it wherever you guys kind of see fit for your audience today.
Yeah,
I always like the beginning because I think a lot of our audience, they're just starting out, and so seeing how somebody started and then where they ended up, like the beginning story is a little.
Yeah, that's what I like too. I mean, like the 800 million assets under management. That's just a vanity metric, right? That doesn't help. It's like, I mean, all these like podcasts are like 0 to 1,000 units. Like, well, the hardest one was the first, right? So like, let's kind of get people some tangible, useful information here.
Love that. That's perfect. Yes, please do that.
Yeah. So first property I bought was just a little property that I was going to live in. Up until that time, I was taught to go to school, study hard, work at a job, save your money to go buy a house to live in, which I don't necessarily agree is the best idea for a lot of young people. But I did that, and I started renting it out, and that's where I got the taste of this cash flow concept, right? Where you put in a renter in there, and it more than pays the mortgage, taxes, insurance, expenses, etc. And I was like, wow, if I just keep doing this again and again, I'll be able to quit my day job that I didn't really like as an engineer. But just kind of before we get going, I mean, I don't do active real estate investing, no wholesaling, no flipping here, right? Like I work with a lot of high net worth, high paid professionals such as myself, as I was. For a lot of those people, your time is best spent in we're all trading time for money at the end of the day.
Right.
Some people can trade it a little bit higher rate at their day jobs that, they may not like it, but it's the best way they can pick up down payments on properties. So a lot of what I did and what I help people do is get started with turnkey rentals. And then once they become more of a credit investor, step into the syndication and private placement space.
Right. And that makes sense. And being that you come from an engineer background, what is your role inside of your syndication company? or the money raising part of it? Are you the numbers guy? Are you running that? Are you the guy in charge of raising money? Are you finding properties? What are you doing?
Yeah, I mean, probably the only thing that I don't do is like I'm not really good on the acquisition side, which takes definitely a skill and a talent to build relationships with the brokers who are a little bit different breed of folks. Especially, I mean, this is where we're kind of getting in more into the apartment space over 100 units.
Yeah.
I think a lot of people they say like real estate is all about numbers. I mean, it's not that complicated, and people can go to my website, download my spreadsheet for free. I mean, it's not that hard, in my opinion. It's just some people they get overwhelmed by more than a few numbers on a spreadsheet or spreadsheets in general, I guess. But this rental real estate stuff, it's not rocket science, right? You bring in $100,000 property, you put down 20% down payment, maybe some extra cash reserves, and you pay the mortgage, insurance, taxes. You got to account for capex. We pay property managers to do our dirty work for us. I mean, it's not rocket science.
Well, when it comes to investing in those bigger properties, how much different is it to evaluate those and be able to come up with your numbers than it is a single family or maybe a 4-unit or something like that? You're still looking for the same numbers, right? You're just doing it on a little bit bigger scale, or am I way off on that?
Right. I mean, conceptually, it's very similar. I mean, you're buying a rental property, price per unit, one, divided by, or, you take out your expenses after that. But like apartments, no different. You just take, $50 million property divided by number of units. That's your price per unit, and your average rent's $800 a month. It's no different. Conceptually, it's very same. It's very similar, but you're just adding another couple of zeros onto the tail end of it. But it is actually a lot easier because when you step into the bigger stuff, your commercial property managers are a lot more sophisticated than residential property managers. You have better property inspectors. Like when you're buying little single family homes or anything below 10, 20 units, you're working with a third party property inspector. And we all know that the reports you get from those things are pretty poor. They're caveated the heck out of those things. And they're very qualitative.
Yeah.
Right. Where the reports that we get on the apartment side are much more numbers based, not more quantitative in terms. And, we'll even get construction and rehab budgets from them. And we triangulate that with our estimates and the estimates from the third party property manager, the commercial property manager, to come up with our numbers. So it actually is a lot easier. So, I mean, it's harder on the smaller scale, but don't be fooled into thinking you can just do the bigger stuff, right? You need money to do that. And if you're going to screw up, and you will, it's better to screw up on a little property on your own first.
Yeah, we can speak to that.
Unless you guys want to buy my $50,000 program, which I don't have, that teaches you how to buy multifamily from nothing.
From 0 to 600 units in one.
Yeah.
Yeah, no, we've definitely dipped our toe in. We know it's a lot better to mess up on a small scale. I mean, you mess up on a single family home or even a 10-plex and you're out 30, 40, 60 grand. Okay. You mess up on some of those big ones and you're losing other people's money. And that's where that's the real problem, right? I feel like you should learn with your money and then perfect it with other people's money.
That's all you would think if you had a conscience, but some people don't care, or they get paid so little bit in their job and they have no other opportunities that is the ticket out of the crab bucket, if you will.
Right. Yeah. Well, if you're doing the same kind of work and it's easier to run the numbers on a bigger unit, you're going to get paid more for doing it. It can on the surface make sense, but there's so many more moving pieces and so many more people affected, not just you and your investors, but the people who work for the apartment complex, the contractors that you're bringing in. All of these people are trusting you in your project management to do what's right, be able to pay them, be able to honor your word, and jumping feet first or head first into the deep end without any experience or training or anything else. I'm sure there's some success stories out there, but that would be the exception, not the rule.
Right. I mean, people are successful doing it, but I'm not going to put in my 50 grand as a passive investor. That's for sure.
Sure. Right. So you are creating these syndications as a limited partner or general partner, I guess, as a general partner, and you're taking on limited partners, right? Can you talk about a little bit what that looks like in your process for doing that?
Yeah. I mean, everybody gets to a point where they have all these little rental properties, which is good to get to your net worth to 250,000, 500,000, maybe a little bit more. But, when I had 11 rentals back in 2015, each rental property maybe brought in a few $100 of cash flow each. But, with 11 rentals, I had eviction or two every other, one or two a year, some kind of big catastrophe that happened every other month. It's not really that big of an issue because you have a property manager that kind of takes the burden of a lot of that stuff. You're just approving purchases. But, for all like a measly $3,000 of passive cash flow a month, I mean, it's cool, right? I mean, when I was in my early 20s, that was awesome, right? That was like almost half my paycheck because it's tax free. But when you start to get a little bit older in terms of net worth, especially become more of an accredited investor, you start to think that, well, this is kind of a pain in the butt and I need more like 30 houses. So you multiply the exception rate by 3, you quickly realize that it's not really scalable to keep buying rental properties on your own in this facet. And also, as your net worth grows, your risk tolerance for liability also diminishes. And you start to realize that there's 30 people that could potentially sue you for all your net worth. And combine the fact that all the debt is being put in your name. Now bring in the private placement in the syndication world. This is like my journey. Like as I started to become more of an accredited investor, I started to get around other high net worth accredited investors, doctors, lawyers, engineers, people who had larger portfolios. And they were all going to these syndication private placements for the scalability reasons, the liability reasons, and the fact that they didn't want the debt in their own personal name anymore. Right. And then the beauty of this is you can diversify over different geographic areas, different properties, different asset classes. One of the rules I talk to my folks a lot about is never put more than 5% of your net worth into any one deal, right? So we're talking about true diversification. And, this all better tax benefits. You can cost seg out buildings and you get all these passive losses to play different games on your taxes, especially if you're implementing real estate professional status. I mean, really, there isn't any reason why you don't want to do it, unless if you don't have money, of course.
Right. Yeah, I completely understand that. And I think one of the things, even if our listeners have a good job and they're bringing in quite a bit of money, it still seems like such a huge leap from 15 that you have to, 600 million or 800 million assets under management. How do you make that transition? You identified that the other people that you were doing were doing it, but that's not just, okay, so now you Google best real estate syndicator and give them all your money. What should these guys be doing to make that transition from their single family home portfolio to vetting a syndicator, vetting a deal, and then deciding whether or not to put their money with that?
Right. And I mean, the dark side of this business is that there are shysters out here, right? And it's very extremely difficult to figure out who's legit in this business.
Mm-hmm. Yeah.
Everybody has a podcast. Everybody's got like a fake book. Everybody's got a fake social media presence, right?
Right.
I mean, this is why I stopped going to real estate conferences, because a lot of them are just fake, right? A lot of the guys on the stage haven't done jack. And I'm in this business as a real estate syndicator myself. I can't even freaking tell sometimes. But this is where like the long-term sustainable method for finding deal flow, and more importantly, who to stay away from, is building a network of other pure passive accredited investors around you. Some of the advice I can give is, how to find this tribe is, well, don't go hanging around where broke guys hang out, the local RIA, the online forums, the free stuff, right? It's just a bunch of people who are still trying to get started. They hear real estate is a great way to get rich. And it is, right? But it just takes time. But as your net worth creeps above $1 million net worth, you have to really differentiate from getting away from these types of organizations and getting around more intimate, smaller groups, right? The average one of my investors is in the ages of 40, mid 40s. They've got a few kids. They make multiple six figures at their day job. They don't got time to go to some happy hour bro session, hanging out with some random investors, right? They value their privacy. They want to talk with other intellectually stimulating people who make high salaries too and have high net worths, right? Granted, you go on the other side of the spectrum, you can't go to a country club because that's just where people who have high paid executive salaries or trust fund kids.
Right.
I've just been fortunate enough to, through my podcast, building a following since 2016, I've been able to sort of become a lightning rod for this type of individual who, has a lot of money and wants to build that tribe of like-minded, affluent people around them.
Right. And that makes sense. I think one of the things that I've always heard is that don't go looking for money where real estate investors are, because real estate investors are always broke. Because they're always either losing money on bad deals or putting their good money into new deals. They don't ever have any money.
Right.
So
I mean, you guys might have some wholesalers, right? I've never done wholesaling before, right? I've kind of skipped over that, just gone to the buy and hold, got on that track. But when you're looking for people with money, they typically aren't the flashy people. They're not the people, a lot of lower level, under $1 million real estate education companies tell you to dress the part, right?
Of course.
Fake it till you make it, as they say. Well, affluent people, they don't want the shine to be on them. They're typically wearing the crappiest stuff.
Yeah. Well, they don't have to. Once you have it, you don't have to prove that you have it, right? You just have it, and you're confident in that. Before you get the money and the glory, you want everyone to think that you're better than you are.
Right. If you're looking for money at the local real estate club, you're kind of looking for that one poor affluent. No, not affluent guy, with that poor sucker who kind of stumbles amongst the sea of sharks. Right. But affluent people with good networks do not go anywhere near those types of places. They already have their network of where to invest their money from their friends. A lot of the most, I think the best investors, they don't know anything. They just know which of their friends, close friends, who to trust. Right. And who to follow into a deal along with, who've had a past performance. A positive experience with a sponsor operator.
Yeah, I believe that 100%.
So, okay, and that brings up the next question that I have for you, and that's you are syndicating and you are looking for these people, but you didn't always have this big network prior to 2016. You didn't know this, so. What were you doing that was able to attract these people who are smart, sophisticated investors to what were you doing to be able to get them to trust you to take their money and make them a passive return?
Yeah. I mean, I started my podcast back in 2016. So if you're starting your podcast later, it's a lot more difficult. And I also started it with the right intentions to help people get started. So I kind of coached people. I mean, at the time I was still buying single family homes, and it was a truly authentic follow my journey, following my mistakes. Of course, as I became more of an accredited investor, I started to realize what a mistake I had been making buying these little dinky single family homes. But it was a true people saw the genesis through this, transitioning to an accredited investor, as opposed to let's create a multi-family investing podcast and teach people how to do that, as they inherently will invest with me, right? Like it's obvious, right? What you're trying to do, it fools some. You're always going to fool some people or a lot of people, but I think that was the effectiveness of it. So, I mean, when I want to invest, and I invest as a passive investor also, what I want to see is I want to see that genesis. I want to see the start from nothing. The people who I don't want to invest with are these people who just come out of thin air.
Yeah.
And they have 1,000, 2,000 units, although they're all just a passive investor, and 3 happen to be larger deals, right? you're not a freaking general partner. You can't be putting that on your tracker. But the people that do that all the time, right? That's why it makes it so difficult.
Yes, we
There's
see
all
that
these
all the time.
tricks and games.
You don't own 500 units. You own 1/10 of 500 units.
And you're not even a managing member of those apartments too. But anyway, I mean, it's still more than most, right?
Yes,
More than most. Yeah. And that's what a lot of these people will tell you, right? Like they'll say, right, well, if somebody ever calls you on it, well, then you just say, well, I have more than you. And that's true. Right? But yeah, like, you know, as you're trying to find, like, there's just so much smoke and mirrors, right? That you got to find your network. Your network is your net worth, as they say. But it's incredibly hard to find these people because they're not at the places you would normally think or waste your time at. And like, but I would say most people, it takes 2 to 3 years to kind of find one person who knows a few other people that kind of bridge that gap slowly over time. But once you do, I mean, it's a small world out here of accredited investors investing in properties they don't even see and people they've only met through the internet.
Yeah, absolutely. So what I've got is work your way from single family to multifamily, if that's the direction you want to go. Don't look for money at the local RIAs. Look for money where away from the type of people that show up to the local RIAs, and make sure you're vetting anybody and the entire deal. If you decide that you want to invest passively, and the best way to do that is to find somebody who's already investing passively and can prove their returns and link in with them. If we were going to send our listeners to find out more about you and get some value, I know if you want to share where they can go, share your podcast, let us know where we can connect you with the people who are really interested in your kind of investing.
Yeah, they can check out Simple Passive Cashflow, passive real estate investing. I mean, the first several dozen or so podcasts were more about single family homes, but as the years went on, it kind of turned more into investing in syndications, apartments, the tax, the legal, because after you get going on with this, the investing is actually the least important part of this. It's more about tax. And then you can start to open up into the world of infinite banking and other concepts that the high net worth investors utilize. But that's all part of the process, right? Like you got to get your net worth, you got to get unbroke, you got to get over $1 million net worth. I think as soon as you can get off of the wholesaling flipping train and buy and hold investments, the sooner you can, the better.
Yeah.
Right? If not, you're just going to be trading time for money. If you don't have a high paid job, then that might be the best ticket out of that. The hardest part is getting that first $250,000 net worth.
Yeah.
Sure. Yeah, absolutely. Awesome. Well, Lane, we really appreciate you taking the time to spend with us to go through some of these scenarios and strategies. And I'm actually going to subscribe to your podcast right after we get off here, because I'm really interested in hearing what you have to offer over there. So we appreciate you and look forward to talking to you again.
Thanks, guys.
Thanks, Lane. Have a good holiday.
You too. Bye.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.